This week we kick off first quarter earnings season, but consensus is expecting EPS growth to decline 0.1%. Ashwani, you think that it's going to come in a little bit better than that. Why is that?
Well, I think, there's generally always about a 2 to 3% surprise factors in the quarters. I think earnings expectations have come down quite a bit. I think maybe a little bit too much. But I think once all companies report, we'll end up at 2 to 3%, which is still not double digits what we've seen for the last 2.5 years. Companies are going to really set a tone for how this market's going to move forward. I think it's very important that companies, obviously beat on the top line, obviously beat on the bottom line, but it's also the language going forward. I think companies, everything's been set for a second half earnings rebound. If you want to call it 3%, obviously not too good, not too bad. It's kind of like there. So everything is set up for the second half of the year. So it'll be really interesting to see what companies have to say.
And you mentioned guidance. It's kind of interesting because some of the pre-announcements that we've gotten going into this quarter, most of them have been negative to the downside. How's that going to play out?
Well, generally what's been happening is in most of for the last 2.5 years, it's always been kind of negative. I think companies want to get the bad news out. Hopefully, on the trading day, which is when the company reports, the big trading day, they don't see as much of a precipitous drop. They feel like, they've kind of warned the markets already. But the rate of negativity, if I can use that word, is not as bad as it has been for the last few quarters. So we're running a 2 to 1 negative to positive. In previous quarters, it's been maybe 3 or 4 to 1.
How about sectors? When you're looking at the sectors, who's going to surprise to the upside and who's going to surprise to the downside? Is it going to be the same thing we've seen tech?
Yeah, I think technology, they're not heavily reliant on input costs and things like higher energy prices. So the sectors that I would be wary of is transportation, things that are really heavily reliant on energy prices, obviously. We've already seen a lot of pre-announcements in that area, but obviously less labor intensive, less cost intensive sectors like technology, even financials. I think financials will outperform because they've trimmed a lot.
So going into the quarter, are there any sectors that you would recommend buying, or do you just wait till we see some of the names come out?
I don't like to do a sectorial view. I think doing an individual company view is better right now. I think there are a lot of names that have a lot of good organic and secular growth going forward. There's a lot of good names in the S&P that you could actually say are cheap on a valuation basis. If you look at forward 12 months, you're looking at the S&P trading at 12.5 times earnings. The 10-year average has been about 14.5. So there is some room for valuation and multiple expansion. You just got to pick your spots. I wouldn't say, in technology you could get some, dogs, and you could get some really strength, like, an Apple or things like that. So I like to say, look at it on an individual basis.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to